and we'll get rolling here. So if you guys have questions, rock and roll with them, and obviously we'll get started. All right. So what I did is took the financials that I sent out from the broker and put them into the Mike Blank's system here. And basically, the first column here, number one, I reproduce the numbers as close as I could from the marketing package based on, it was page, I think, 19, where they had the pro forma income and expenses on the T12. And I also matched it up to the T12 in the second column as well. So what I got, and kind of the reason that I'm glad that I'm kind of doing this is they're looking for 9.1 million. It's 128 units. So what I did is just went ahead and put in all their numbers, and it does make sense all the way down here. It's a 6.20 cap, 1.26 debt coverage ratio, which is good. So that made sense. So that's where I started. Obviously, their expenses are right on at 50%. So then what I did is, I guess, did everybody do at least that part, or do you understand that? I guess this is hopefully interactive here. So hopefully you guys did that. So I modeled what the broker had. And then the second one here again is the T12, which really didn't have any variances. I always do that just to make sure. Now the T12 had a 5% vacancy factor, so I put that in there. So that's a difference there. So now your net income drops from 1.1 to 1.080. Okay. And another thing I did here as well, in Michigan, this property is in Michigan. The taxes are going to go up based on what this property sells for and some other, it's smoke and mirrors basically. But the non-owner occupied mill rate for this area is 7.283. So what I've been doing and others in Michigan have been doing is you take the sales price, divide it in half, and then you times it by this mill rate here to get you an estimate as far as taxes. I'm sorry, one more time? Okay, somebody's speaking. If you had questions, let me know. So what this 377 is half of the $9 million asking price times this mill rate, which gives you the taxes. And Michigan is probably the only state that I know of that it'll affect you this way. And it is a huge affection if you notice. You're going from the realtor's 113 now to 331. Even in their pro forma, he has the taxes at let me see here. He has the taxes at 135, which, again, question? Go ahead. Does this make sense, ladies and gentlemen? I mean, what I'm trying to do is kind of walk through and kind of poke holes in what the broker's given us and see if this is a valid property or opportunity. So that's the biggest hole. And a lot of investors, I find, don't really do this as far as the taxes. They just, assume it's going to go up by a little bit. If you notice, though, that's a huge, huge jump. And if you buy this thing on pro forma, you're going to get, and again, this doesn't take effect until the next following year you buy it. So you think you'll be at this tax rate, and all of a sudden you get this big old tax bill. And again, this is an estimate, but I'd rather estimate high than low. And another area I added is they didn't have any in here for deposit for replacement reserves. Now I know that they said they just redid the property and all this, but some banks, most banks, will probably require you to have some deposit, for those incidentals. And plus you want to make sure when you're doing these, can the person with the dog, can you mute your mic for me, please? We're hearing a dog in the background, and I want to make sure that people can hear and ask questions. If you could mute, that'd be great. Thank you. So that's another big distinction is from the pro forma to here. Could the person with the dog mute, please, so we could hear? Thank you. So basically, those are the two big differences is here, and obviously you see where it takes now your expenses into the 74% range, right? So now that, 9 million with those added expenses really doesn't look that good because you're now negative on your cash flow and negative on your debt service. So that's where I kind of wanted to, bring it to the group and say, okay, I've got such a huge difference. Let's say I stay at 6.2, right? The cap rate, they're asking 9.1. I go back to the broker and say, hey, I'm going to start at 4.4. I mean, that's $5 million difference. I guess the question is, what have I missed? Have I missed anything? And are the assumptions correct? So I'll kind of open it up to the group. If anybody's got any, questions, anything, because this is kind of an interactive thing here and seeing if this is, making sense or if you have any questions on what we've talked about so far. So if you guys don't want to talk, you can chat if you want to do that. Sorry. But that's where I am at. That's as far as I got in the evaluation, because right now this would be a no-go from my end, and what I would do is call the broker up and talk to him and say, listen, I'm not going to waste your time and do an LOI because 9 million just doesn't work. But there's such a disparity, or a difference, I should say, between what they're asking and what, let's say, it's worth because of the expenses that they missed out on. And again, I'm not saying I'm right or wrong. I'm just kind of talking to you guys as, a sounding board. What are your thoughts? Okay, thank you, Jeffrey. I appreciate that. He said that this is the first time he's done it, and that's okay. That's cool. But that's why we do this, is kind of, okay, Tina, sounds good. So basically that's where it's at, because we've got such a difference in the price. Now, this presentation I just ran through with you, I would typically run this through with a broker, and I have done that with brokers, so they understand even before, I throw them an offer of 4.4. One, because I'm trying to build a relationship with the broker, and two, walking them through my methodology and making sure that I understand that. I mean, you don't want to crush them on there and say, well, you didn't include vacancy. You really that stupid? You want to say, hey, it's been a great package. That's awesome. You may overlook this, even if it's 100% vacant. At some time during the year, you're going to have some vacancy, so you have to put that, and the bank's going to require you to put that in there. So so that right there, is a $53,000 difference in price. So what I've done is I've walked it through just like this with a broker. Now, they may agree totally with me. That doesn't mean I get the deal. It's just they've sold it one way to their seller, and typically, because that's a huge difference. I mean, that's a $5 million difference. He's got to go back to the seller. But again, I want to make sure that I'm looking at this correctly, and this makes sense. Meaning, if I've got these things wrong, okay, maybe the taxes are a little bit high, okay, but they're not going to be off by $100,000, $200,000. So I'm just trying to understand. So that's what when I talk with the broker, that's what I do. So for this property here, this is as far as I got because we have such a big difference from what the broker's looking at to what it we can start negotiating with. I don't know. Has anybody of the people who have done deals have you had this big a difference in the past? Or you probably all haven't done it. You can use the chat.
If that's similar to Jeffrey, I haven't done any deals. I'm just kind of following along here.
Okay, no problem, no problem. And again, I appreciate that because what I really kind of want to do is make sure that I'm not going crazy. You know what I'm saying? You do these things kind of in tunnel vision, and that's where I kind of, and that's why I raced to get this this webinar done this weekend because I think I'm going to talk to the broker. I've already got an email into him. So, but I want to make sure that this makes sense to another person, whether you've done a deal or not. It's math. It really is just math. So if my expenses are going up by, let's say there's 53, there's, almost 100 and some there, and there's another 20, that's a huge difference in what they had on their marketing package. So that's what this spreadsheet allows you to do is kind of model different things. Now I did go on the summary here. Sorry, it's so small. I did go on the summary page here and kind of model it a little bit. But again, at this point here, seeing that there's such a big difference, let me take which one do I want to take? Let me take number 3. There's such a big difference here. I've gotten to the point now I don't go out any farther and do any more deals because this is just right now not an opportunity. And to talk the broker down by $5 million, depending on how he sounds or he soundboard, it may not happen. So we got a big hurdle. So I don't take my time and do other offers and this and that. I mean, I'll get it here and mention this to him, but over here on this one here, I'll just do it at 3, and you can see we're good, right? We've got this green, that one's we need to put some money in there, but this looks good here, right? So we could go up on the offer, meaning we can go up off of our 449. How much? We would have to play with that and see where. Because again, if you're looking here, they want at least 17%. 10 to 12 is pretty good. Obviously higher the better. So you could go up a little bit on this offer. And how you do that is you just play with the numbers right here, and just go up. Let's go up. That'd be a real good deal if we get it at that price. And then see what it does to your numbers. Now we're down to 32. So you could go up. You could still go up a few and just play with it and get these numbers here staying, in the. Obviously, I know he wants 17%, and that's because if you go in the deal desk, you got to have enough pie for everybody. So shoot for that. But we still have room here, so I could still play with this. But I also want to make sure that I watch these two numbers here. Obviously, my debt coverage ratio cannot go below 1.25. And, obviously your cash on cash wants to stay, at least 9%. So you go and play with the numbers in here and see how high you can go on that. And again, I have not, and I should probably put in some kind of, go ahead. So we're still playing with it. And what I probably should do is I don't know why it's not taking repair and reserves here, because I do have them. So that's what I would do is kind of play with it there. So now we're up to 495, 4950. So go back over here and see if 4950 works and see what it makes. Right? Let's see what the numbers look like on that. We're still a little bit above there, 50. We're still strong. It's very strong. Now it's saying at that cap rate that they're trying to sell it at is worth 8.7. Okay, all things being equal. Actually, I got to change my taxes here. Well, I'd have to change my taxes based on my new offer price. I'll just keep them the same. Let's just keep them the same. We can adjust that and tweak that later. So now what I've got a new number of 6. So I could go up to 6 million from the 9 and try that because our debt coverage is still there. We have a repair allowance, right? We've got 5%. Now also on this one here, I should tell you, this is with market rents. Now I probably should have mentioned that. I put in what they say the market rents are, so obviously the GPRI, or the gross potential rental income, is higher than over here. Okay, so what I need to do is make this number what it is right now. Never buy it on what it could be, because you will get in trouble. It'll never work. So what I do is bring this back down to where they're at right now. Yes, you can raise rates, right? That's always, a possibility. So now with our new number, now we're actually back to our negative again. So our new number up here doesn't work. So what I've done is kind of said, okay, 9.1 doesn't work, 4.9 doesn't work, and again we're still with the same lingering question. We've got a huge disparity, or a difference, in what they're asking to what we think we can get it financed for. So again, at this point I would just say, hey, Mr. Broker, what are you thinking? Give me ideas. They're more than likely doing it on the increase in rents right here. That's probably how they're doing it, meaning that they're selling it, that the gross potential rental income is 1176240, and that's on the financials page of the unit mix. That's probably what they're selling it on, and that's where you got to kind of talk the broker off the ledge and say, somebody else will buy it that way, but I have no intention on buying it that way. And again, I'm not a lawyer, I'm not a broker, I'm not not an attorney. I'm just giving you experience and some, and just walking through the numbers with you, because it's got to make sense. You've got to sell this not only to yourself, to investors, and to a bank. And you go into a bank and say, okay, hey, I've got a great deal and it's 115. You're going to have to bring more money to the table, or they're not going to do it. So that's why these red and green things here are on here, to kind of, this is the parameters. That's the box you got to be in to do that. Anybody have any questions? I hate to be the only one speaking here. I feel like I'm the teacher.
Well, you know what they say, teaching is learning twice, right?
You got that right.
But yeah, it makes sense. You obviously want to go through all this stuff. The numbers that they're going to give you are just going to be, ridiculous, right? It's not going to work. And they're going to tell you the nice numbers that, look nice, but that's not always the case.
Exactly. And the thing is, that's when I'd call the broker and just kind of talk with them. That's kind of where again, like I said, that's where I stop, because there's such a huge difference here. Now, would I have where I've, mentioned this FAR number to the broker on the phone, and of course there's silence on the other end, because he just saw his commission go in half. But it's like, this is how I buy, or this is how somebody is going to buy this. I'm not saying somebody won't pay 9-1. I'm not saying somebody who's got cash with no money expense. I'm not saying that, but I'm just saying for my going forward, my investors, the way I buy, I couldn't do that. And I want to explain that. One, to let the broker know that I know what I'm talking about and kind of show him that I'm a little sophisticated. I'm not just, doing the stuff on the back of a napkin. Also, I don't want to, insult him and say, listen, I don't care how good of landlord you are, you're going to have some vacancy. You can't, and the bank's going to put 5% in there, 6% just to, just for their thing. So you have to do that. So that's what I would do, is just kind of walk it through like that. And then what you can do is over here, and this is what I like about Michael's system here, is you can go in and change numbers and watch it happen here, simultaneously. So you can get all this stuff and get a pretty good offer, fairly close, and where you want to, be upper limit and lower limit. And that way, when you're talking to the broker, again, if this number was closer, you could say, okay, your cutoff number is, 87598, So that's good about this, is you have these as indicators to tell you what to do. Because again, you're going to take this stuff and take it to your investors, and no investor in the world would invest, I wouldn't say in the world, I shouldn't say that. As a general rule, they probably want to make more than 2.9% on their money if they're giving you any kind of money at all to do that. So, but anybody, any other questions? I think I covered everything. I mean, I'm trying to think what else.
Quick question. So,
Sure.
once you get a package from the broker and you run this analysis, what would you think your general turnaround time? Because one thing that I've noticed with other beginning real estate investors, they'll get something and they'll analyze it, and then they'll say, that doesn't work, but they never actually get it back to the broker. So I'm curious how quickly you get back to them. The same day, or within a week. Keeping in touch with them, and even letting them know, hey, like, this isn't going to work. I'm looking for something that's more along these lines. It's beneficial to keeping that relationship open.
And that's a great question. He sent this to me within a time frame. I sent an email back, said I'll get back to you within 48 hours, and I like to get back to them within that time frame, if not before. Within 5 hours from them, I emailed him asking him his availability for Friday to talk over the numbers. So I get back with him very quickly because, yes, I am one of those kind of guys that I can sit here and I've done it, where you just go out and, obviously Michael makes it so easy where you can go in and add all these different scenarios, right? Yeah, you got to get back to him real quickly. And something like this is more of a delicate, because, this is a huge thing. Now, if it was closer, I'd still get back to him, and see what you're thinking. Hey, listen, I came in at, 6-7. What do you think we can do? Like, and again, don't worry about putting an LOI in. They're not going to hold you to it. But again, just get back to the realtor or broker very fast, and that's a good point. Get back. So I try to do it within 24 to 48 hours. No, you're welcome. And the only reason I do that too is that it forces me not to do what you just said, as far as, I can analyze it one more time, I get another day, or this. At this point here, I can't analyze anymore. There's a $5 million difference. I don't know what now. Can I get creative? Yeah, we could do seller financing. But that's a question for the broker when you talk to him. Hey, listen, we got a great, I can get close to his price. What about seller financing? Oh no, the guy needs to be cashed out. Okay, boom. So if you spend all that time running, here's a seller carry, here's a non-seller carry, 80% night, and that's the biggest thing, is get back to them real quick. Say, listen, here's what I'm thinking, because that is the biggest thing. Is people, do that, because these spreadsheets can turn into little toys if you want to. And trust me, I've done that too. So, any other questions? And again, I don't mean to be stealing all the thunder here, but I wanted to get this and make sure that this, made sense, makes sense. And then I was seeing the same thing as, you see the same thing as I am seeing. And also after this call, if you guys, have comments on this, please let me know. If you go through and look at this and I miss something, by all means, please let me know. Because my game plan is I'm going to call the broker and talk with them. I'm good, cool, okay, great, and see what happens. And it may be one of those things, you never know. I've seen it where that's the number they need because the property's in foreclosure, and that's what the bank says. Okay, well, who knows? Okay, any other questions? If not,
One thing I'm noticing on the spreadsheet under income for the concession lot to lease, the percentage in columns 2, 3, and 4, it shows 0, but it still has the same 11,770.
yeah, I noticed that too. I don't know why that is. Let me see. I probably just didn't. I typed in the 1170. That's it. Well, that's a good call, because you got to kind of watch that, because if I just typed it in as a negative, and I didn't do it as, because it adds it. Yes, you got to watch that. Sometimes if you don't do that, you got to make sure it's correct. But thank you. Yes, that's good, because if this row that's all connected. So if I do it here and it goes across, when I went in and put these in manually, it overrides that. But that's what you should do as well, is check the math and make sure that, this minus these equals this. Don't assume that the Excel spreadsheet carried it through, because sometimes it doesn't. But that's a good catch. Thank you. I appreciate that. Okay, well, listen, if you... No, go ahead.
Not something that I want to add, but Jeffrey mentioned in the comments the overriding formulas and the sheet lot.
Yes, definitely. And that's why kind of, when you go from this column over to these other ones, you got to make sure that does make sense, and it is at 1%. Because see, I haven't changed this at all going across, so I would just assume. But now if I pay it a different number in there, I got to make sure that changes or goes up when I put in the market rates. And that's really, I mean, all there is. But this is the one step that you take and make sure. And this will give you guys and gals confidence when you're talking to the broker. And I know it's helped me having something in front of me. And what I typically do, I'll tell you right now, I will have this open in front of me on the screen. I will either copy or cut this out and send it to him beforehand, and have him pull it up on his computer screen too, so I can walk it through with him. So if he has a question, just like, let's say that he just had that same question. Hey, this column here and this is 0. Is that correct? Oh yeah, you're right. So we can correct it right there or answer his question right there. So he's looking at the same thing that I am. So I do kind of, when I get back with them, I say, listen, I'm going to send you something. Are you in front of a computer? We can, you don't have to go on a go-to meeting just like this. I have mine open just like you see on the screen here, and I would walk this thing through. So if he has a question, well, why did you put in, 5% vacancy in your second column of 53? He's 100%. You can explain it, and he can see what you're seeing. And that's helped me a lot as far as the understanding. Now, I'm not saying that the broker sides with me and says, oh my God, you're right, I screwed up. I don't think they're ever going to say that, because again, they've already sold the owner on making 9-1, and just like those $1 million listing shows and stuff like that. I mean, they've sold it at a price. So I mean, they're not going to go back to their owner and say, "Oh, I screwed up." it's now worth $5 million less. I haven't seen that happen. Not yet, at least. But, okay, that's good. Let me see, make sure. Looking at my original no formulas in the vacancy and concessions percentage sale. Okay. Looking at my original, obviously, Gregor, you must be, are you talking about the one you have or the one I'm showing right here? Meaning don't overwrite any formulas, and that's right. And yes, and if you do overwrite them, make some kind of note that you have done that. Meaning, what I think Michael does is he makes his cell a different color, so he understands that, hey, I changed this formula to make sense, and that's good. That is a very good idea. And again, you can play with this. This is a pretty good standard, pretty good way to start with that. And that's it. That's all I have. I don't want to take any more of your time, and I appreciate you guys and ladies coming on, and I appreciate you guys listening to me. And again, if you have a chance, and if you go through this, and if I've missed stuff, let me know. PM me or just do it on Facebook there, because I am going to proceed further, and I'm going to talk to the broker. But I want to make sure that I'm putting in the right numbers and having that accountability kind of thing of, am I really correct in these kind of figures here? I believe I am, but again, I'm not always the smartest guy, and I'll admit that right now. I'm not the smartest guy in the room. So, okay, that sounds good. All right, well, listen, guys and gals, I'm going to let you go unless anybody has any final questions. And like I said, I am recording this. I'm going to figure out how to get this posted somewhere, and what I'll do is I'll put that in the Facebook group, and then we can go from there. Okay.
Wonderful. Thank you so much, Pat.
Well, thank you for listening.
Okay, thank you.
Thank you, guys and gals, and thank you. You're welcome, Tina. All right, well then we'll talk to you guys on Facebook.
Thank you very much.
Okay, well, thank you. I appreciate it. Have a good Saturday, and we'll rock and roll.
Thanks.
Bye-bye, guys.
Awesome. Have a nice weekend, guys. Take care.
All right.
Thank you.
Bye-bye.